Hello, and welcome to the second chapter of the Bybit 101 course. In the first lesson, we will be talking about spot, margin, and leverage trading. Let's get started. What is spot trading? Spot trading involves directly purchasing or selling financial instruments and assets such as cryptocurrency, forex, stocks, or bonds. Spot trading occurs in spot markets, which are either exchange-based or over-the-counter, directly between traders. When trading on spot markets, you can only use assets you own. There is no leverage or margin. How to spot trade? From the Bybit main menu, click on the Trade tab, then on Spot. On the right side, you will see the Order Book section. At the top, you will see all the sell orders in red, and at the bottom, the buy orders in green. On the left side, you will see all the supported trading pairs in each market. The middle section shows you the real-time market candlestick chart. On the far right corner, we will see the trading section. The limit tab allows us to buy crypto for a specific price. Let me give you an example. Let's say that Bitcoin's price is $10,000 and you want to buy one Bitcoin at $9,000. When the price of Bitcoin will reach that target price, the order will be filled. You can also check your order status, scrolling down below. You can cancel your order at any given moment. The market option lets you buy or sell crypto assets at the current market price. The take profit stop loss function helps you manage your risks more effectively by enabling you to set take profit and stop loss orders simultaneously. Margin trading implies leverage trading, and trading with leverage implies greater risks, and you should always do your own research before using any leverage mechanism. How does margin trading works? Let's assume you bought one Bitcoin at $10,000 some time ago. Now the price is $11,000. You're at a $1,000 profit. With 3x leverage, your profit would be $3,000. Caution! Normally, if you would have bought Bitcoin at the same price and it would have decreased to $9,000, you would be at a $1,000 loss. Margin trading amplifies losses as well, in this case being 3x. If you are new to crypto, and especially new to trading, you should be aware of those risks. Benefits of using Bybit margin trading. You can choose from hundreds of margin trading pairs, so you are having a large variety, and you can amplify your wins, but also your losses. How to use Bybit margin trading? On the top of the Bybit main menu, click on the Trade button, and after on Margin. In order to do margin trading, we will need to deposit funds to our wallet or transfer some funds from our other wallets, and we are good to go. The borrowing option will enable you to do margin trades, because it means using your money and borrowed money to your advantage to make an even greater profit. After you added the collateral and borrowed the money, you will be paying a small interest until you close your position. Congratulations! You just started your first margin trade. Keep in mind that you will need to also check your LTV. LTV stands for loan to value ratio. You are starting with 60%, and if you are reaching over 95%, your position will be liquidated. For more useful information regarding margin trading, click on the external resource link. At 10x margin, when $1,000 worth of Bitcoin, you will be looking at a $10,000 trade. After you consider to close that position that you are into, click on the repay button. Good job! You just made your first margin trade. You are awesome! Let's see what is leverage trading. With spot trading, you can make profit by buying low and selling high. But with leverage trading, you can make greater profits by predicting where the market is heading. Let's assume that the price of Bitcoin is $10,000. You predict that the price of Bitcoin will rise in the near future. This means that you'll be buying in a long position, and you can also buy a position with leverage. If you bought one Bitcoin at $10,000 with 10x leverage, and Bitcoin got to $11,000, that's a $10,000 profit. The cool thing is that you can also choose the shorting option. Shorting means predicting the price of a specific asset will decrease over time. How to use Bybit leverage trading? At the top of your Bybit main menu, click on Derivatives and then on Derivatives portal. Here you can pick from 4 options: USD Perpetual, Inverse Perpetual and Futures, USDC Perpetual and Futures, and USDC Options. For this example, we will choose USDT Perpetual. Trading with leverage has its own risks, and should always do your own research before investing. Let's choose the BTC/USDT pair. You can choose between cross and isolated. Cross is a riskier option because when you will make a trade, the rest of your funds from your futures account will be added as collateral. With isolated, the funds that you're not trading are totally safe and won't be added as collateral. Just set your desired leverage and the price you wish to long or short Bitcoin, and we're good to go. In the second lesson, we will be talking about Bybit trading bots. See you in the next one.